Hello everyone. I hope you can listen to me and see me. So my name is Alberto López. I work at JP Morgan Equity Research. I head what we call EMEA Data-Driven Research in Europe, Middle East, and Africa. Now, before I tell you, what we mean by data-driven, first I want to congratulate the whole Carto team for putting this fantastic conference together, and of course for inviting me to present here. So, as Florence said, so my presentation is about geospatial for alpha generation in discretionary investing. Now, that sounds a bit boring, but believe me, it is not. It's just a bit of financial jargon that I'm going to unpack for you. So basically, here at Equity Research, what we do is we're basically advisors to discretionary asset managers or fundamental asset managers on public quoted companies. And we specifically advise them on how to outperform the market. So in other words, and this is a financial jargon equivalent of alpha generation. So in other words, my presentation is how we use Geospatial to help our clients outperform the markets. Now, from this first slide, the other key takeaway is that we are basically generalists. In EMEA alone, we cover more than 800 companies across basically any sub-industry that you can imagine, and a lot of them are global. So, quite a wide remit. So what do I mean by data-driven equity research? So data-driven for us is the use of alternative data and or analytics in order to obtain insights into a company or a market KPI. And a KPI, we mean things like volume, traffic, pricing, discounting, margins. Basically, any variable, whether direct or indirect, has an impact on the financial statements of the companies that we cover. And there in that slide, you can get a bit of flavor on, all the, let's say, areas that we cover that we think data-driven, whether it's, data on the left, analytics on the right, and there you can see geospatial analysis at the bottom right. So if we kind of zoom into geospatial, so what is the role of geospatial in data-driven, in our day-to-day? So I think like geospatial, to be honest, I think it's, an area perhaps that hasn't had its fair share of attention, within all the different techniques. It is true that, geolocation specifically in 2020, because of COVID, it has been at the forefront, but even before, I don't think it has had its fair share, but I think that it's, I'm very optimistic internally about basically the concept of using Geospatial as a platform, something that we can replicate across companies, across sectors, which always means, economies of scale and better returns. Now, there are three ways that we can basically create value for our clients in geospatial. The first one is, speed, being the first in the market with a geospatial analysis. You need to understand in the stock market, the value of being the first to market is significant. Or in other words, the right insight at the wrong time can be worth very little, and you may have wasted your time. So clearly an area that we focus. Second is creativity. I don't think I need to explain a lot of it. And at the end of the day, you give the same geospatial data set to 5 people, you get 10 different questions, 15 different answers, and maybe 20 different methodologies. And not all of them, our clients appreciate equally. And then the last axis there, it's a deeper dives, going very deep into each topic. It is true that one, because we are generalists, and two, because we are external agents, which means that we don't have any internal data whatsoever. And this is compounded by the fact that we cannot buy transactional data. It's very often, in most of the cases, not offered to financial institutions. We are at a bit of a disadvantage, but still, we do our use cases about, for example, poster child, food retail, overlap, competition analysis, cannibalization. But now when I was selecting the use cases, I didn't want to select this kind because I think that we are a bit of a disadvantage versus corporates that, might present today or maybe in 2-3 months in the next special conference. So I selected something that was closer, I think, a bit more unique to equity research, for what we do every day. So the first use case is a case of speed, a go-to-market. So we basically managed to put 6-7 people working together. So from idea generation to completion, we managed to get something in the inbox of our clients in less than 2 weeks. And for everyone that works in big organizations, I'm sure you can relate how difficult that can be sometimes. So the use case itself is helping to identify BVA and Sabadell cost synergies. So put yourself in our shoes. end of last year, there start to be rumors that two of the biggest Spanish banks may do a merger, and because driven partly by cost synergies, and within these cost synergies, one of the topics was potential closure of bank branches. No? So rumors are out, share prices start to move up, down, clients start calling, is this good? No, how should we think about it? So we start to use Geospatial to help our client answer all those questions. So in this case, we basically obtained 14,000 bank branch addresses for all of Spain. We geotag them. We calculate catchment areas. We try to understand so different, not just estimate, but provide sensitivities. Is always providing a range. What are the different time ranges? What are different ways of calculating? Is it only walking? Is it a business of proximity? Is it different urban areas versus non-urban areas? And between all of these factors, trying to triangulate, we come up with basically like a central base case, which is we think that 55% of the acquired branches can be closed. Now, this in itself is not the goal, because at the end of the day, we need to provide something actionable to our clients. And actionable is basically translate that percentage into how much actually euro million savings. So imagine 500 million. And then we need to put into context, how does this combination compare to what if another competitor would buy Sabadell? Is it more, less? And we basically put all of this in a report to our clients. We think we were one of the first ones, very appreciated by clients, so very good feedback. And this is, I think, a good example how we work. This one was kind of phase one, and we were already thinking about phase two, which is if the banks put out a press release and then their estimate is very different from our estimate, then what other variables, what other data, what other ways of analyzing we need to go deeper to see if our estimates are conservative, their estimates are aggressive, and provide some directionality to our clients. In this case, the merger didn't go through, so we never knew how close our number was. In the second use case, which I hope it's a use case represents creativity, it's about toll road traffic recovery. So again, put yourself in our shoes. Pandemic hits last year, toll road traffic plunges 50-60% down, and investors starts to question what is the pace of recovery. It's the summer, second wave. This is what I call a data vacuum, very little information that our analysts had with regards to 3 very specific toll roads. So, we're not looking at to do general mobility in a country. We're looking specifically, 3 toll roads with, different characteristics and very specific coordinates. So what do we do here? Basically what we did is we did a blend of 5 alternative data sources. All of these data sources had 2 things in common. One, it has high frequency, so daily data with, if I remember correctly, up to a week of lag maximum. And the second, it had a geospatial component. And some of them, the geospatial aggregation, unit of aggregation was already predefined. It could be, like a city, it could be the equivalent of a county, so even more granular. It was, quite granular, the data. And others, they were not prepackaged, so we had a bit more wiggle room to really go into, this is the toll road. So these are the corners, this is the geofencing segment, how many cars, yes, no. Now, the key thing here is not always doing the calculation, but how to blend them. Because, you need to think, what is the mix of traffic between passenger vehicles, commercial? In commercial, you have heavy-duty, light-duty trucks, you have vans for last-mile delivery. It's very different, the mix, if you have an intra-city or a ring road toll road, or if you have an intercity toll road. And you also need to take into account seasonality, depending. Some of the 3 toll roads, one had, huge seasonality, the other didn't, just depending on which area and the weather, etc. So we put all of this together and basically inform an analyst that goes out and says, okay, we think that in Q3, the traffic is going to be down 45%. It's going to be very little improvement versus June. And then 20 days later, the company reports, 44%. That was very gratifying. The company called us and says, how did you do it? So it's very interesting and exciting for us to get a peek into what is happening, quasi real time. But again, our goal is not to give like a number. We have to give, base case, but it is, to provide a range and also to look at directionality. Is it improving a lot? No. Is it not really improving? And how that put into context with the stock. Last use case is about wind power generation. So as you see, very broad use cases. Now we have at the beginning banks, then now we have toll roads, now we have wind power generation. This was for, and actually the three of them in different countries, of course. One of our analysts covering renewable companies wants to understand the power generation of 300 onshore wind farms. For those of you that have, worked with wind farms, onshore they are smaller, a bigger number. Generally, offshore are, bigger, the ones that are in the middle of the sea, and are bigger and normally have probably, like a weather station closer to it. So, it has a bit of a difficulty. So what we do? So in this case, again, you have these 300 onshore wind farms, clear geospatial components. So where are they located? We have to go, onboard the data set with the wind speed, because of course, wind power generation is a function of wind energy, the input, the installed capacity, and other factors like curtailment rates, for example. And then we basically, with this data that we onboarded, and there's always a trade-off, do we onboard more data? How far are the sensors versus the weather station? So the sensor of the weather stations compared to our assets? What is the degree of risk? Where can we make a mistake? These are all things that, of course, we think about. There's always a trade-off. That's the reality. And we model wind generation with a bootstrapping method in order basically to provide a range. And we tested in our backtest, looks good. And then we go basically live and our analysts publish it. And with this, first time, predicted was actually, within the interval and, quite accurate. And since then, we have had an out of sample average error MAP of 2%, which is lower than the backtest. So that's usually pretty good. Normally it's the other way. So I hope that, that has given a bit of flavor in only 15 minutes, a bit less than 15 minutes on, the kind of things that we use. I think Geospatial has a lot of potential, both, on objects and on mobility. And it's something that, internally, I think that I'm quite a fan. And we think that next year, hopefully, we'll present with significant more use cases. So thank you very much. And again, thank you very much for inviting me.
Thank you very much, Alberto. It was great to have you here. There is actually one question, which is from Rohan Naik, who's asking, what modeling techniques were used to model wind speed? And what about missing data from weather stations?
Yeah, so for the modeling, we used simple linear regression. So we had, we tried others. We tried logistic, we tried sigmoid functions, but at the end, linear regression was the one that worked the best. The reality is that a lot of the times, because we need to measure against, reported company data, when we have 6 years of monthly data, it's still less than 100 points. And of course, you're not going to do a neural network. That's the reality. In this case, we're actually quite lucky because we had, if I remember correctly, since 2014 monthly data. Normally, it's quarterly data and, since 2016 or so. So in this case, was not as bad. The results are there. The fact that the out of sample error was lower than the backtest, that normally happens the other way. And in terms of missing data points, well, the reality is that, we kind of like created, when we did the mapping of the locations versus the assets, we kind of like did, statistics on how far are each location from the closest satellite or sensor data. There were very few that didn't have any, and thankfully, when you weighted by the megawatts installed, the ones that they had bigger are actually the ones that had closer. So we were lucky, and this is all the kind of like trade-off that when we were discussing. It's 400 weather stations enough? Do we basically buy another data set that has, complementary to scale it? What is the error that we're going to be making? But, when we're testing out of sample, assuming all the errors and the kind of like generalizations that, we have to make, we were getting very good numbers. And, that's when we decided to go ahead in our business. And the reality is that you always have the trade-off between how deep you want to go and how fast you want to be on the market. So it's something that is our everyday life. As an analyst, I would always like to go deeper and have plenty of time, have all the data available. But we have to basically solve for a return on investment, from a business perspective.
Absolutely. And for curiosity, Alberto, previous to your role at JP Morgan, had you already had experience in geospatial analysis use cases, or did this is just something that you've got into because it's become more important to your department?
Well, it has certainly become more important. So my background is a research analyst. So I was before in consumer, then in chemicals, and about a little over 2 years ago, we started putting a lot of attention on this data-driven effort. We were doing things before, so we have done kind of like, again, poster child food retail competition overlaps, shopping malls. We had done it before, but this is really when we as a whole, as an organization, started focusing together. And as I say, I think like a lot of effort or focus now in geolocation, although before it was a bit different. But I think like for a company like us that we cover so many industries, so many physical assets, physical objects, I think that the potential for this to grow within the organization is huge. You have the data issue I've spoken about. Let's not be naive. You have a modeling issue, very specific, but that's where Carto comes into place, and I think it can make your life significantly easier. So yeah, hopefully next year we have a lot of Carto screen shares.
Awesome, brilliant, Alberto. Well, thank you so much for joining us and taking the time. It was really